Okay, imagine this. You wake up tomorrow, you grab your coffee, pay rent, maybe even book that flight to Bali you've been dreaming about. And you do it all without touching a bank account, without using dollars or euros. Just crypto. It sounds like the ultimate financial freedom, right?
It absolutely does sound like the dream. But getting there, that path is, well, it's got a lot more twists and hidden costs than most people think. So our mission today, using the sources you've pulled together, is to really dig in and figure out the actual cost, the practicality of living like that.
Yeah, is it a real workable financial life? Or is it still just sort of a cool but maybe expensive digital experiment?
That's the core question.
So this deep dive is really your shortcut to understanding what it takes. We're going to cover the whole picture. Earning crypto, spending it, saving it, and importantly, how managing your money long-term. It's completely different when you step outside traditional finance.
Exactly. And to start, we really need to grasp the scale of this shift. Living on crypto, I mean, it's way more than just swapping one currency for another, like dollars for Bitcoin.
Right.
It's about plugging into a whole new financial system. Think self-custody, think DeFi, decentralized finance. It means you're earning, saving, and spending digital assets. Maybe Bitcoin, maybe Ethereum, maybe stablecoins, for pretty much everything.
So it's not just like using Apple Pay instead of a credit card. It's more fundamental. It's like saying, okay, I'm my own bank now.
That's a great analogy.
Yeah.
If traditional finance is like a service department, with the super and security, crypto is like building your own cabin out in the woods. Total freedom, but all the responsibility, that's on you.
Okay.
Precisely. And out there in the woods, the rules are just different. And maybe the most critical rule, the one we have to keep coming back to, is this. In many places, crypto isn't treated like money, like currency.
Oh, right. How's it treated then?
It's treated as property, like stock or a collectible. And that single fact, it changes absolutely everything about using it for daily stuff, especially when it comes to taxes. We'll definitely circle back to that.
Okay, property, not currency. Got it. Yeah. So if that's the new system, you need income, right?
Yeah.
Fuel for the fire. Now, a lot of people here earn crypto, and they immediately think like massive computer farms mining Bitcoin or day trading charts.
Yeah, that's the old image.
What do the sources say about earning for, say, a regular professional? A developer, a writer, a designer?
Well, the good news is the entry points are much lower now. The sources highlight that a big way people are earning actively is through specialized freelance platforms.
Like what?
Think sites like LaborX or CryptoJobs. These platforms connect professionals directly with gigs paid in crypto. So you might get paid in Ethereum or maybe a stablecoin like USDT, sometimes even in the tokens of the startup you're working for.
So it kind of breaks down geographical barriers for work.
Exactly. Huge potential there. But okay, beyond actively working for crypto, there's all this buzz, especially in finance circles, about passive income. And that usually means DeFi.
Right. Decentralized finance. Before we jumped into things like staking or yield farming, maybe just quickly, what's DeFi actually doing that my bank isn't?
Good question. Basically, DeFi protocols let you do bank-like things. Lending, borrowing, trading, earning interest, but without the bank in the middle.
Right.
It's all built on code, usually open source code, running on a blockchain. And that's where you get these passive income methods like staking, where you lock up your crypto to help secure the network, or providing liquidity, often called yield farming, where you lend your assets to a trading pool.
And those returns, the APYs you see advertised, they often look astronomical compared to a normal savings account.
They can be, yeah, they definitely grab your attention. But this is our first major reality check.
Okay.
Those high returns come with equally high or even higher risks. First off, you've got massive market volatility. The crypto you staked could literally drop 30, 40, 50% in value overnight.
Oof.
And maybe even more critical is the risk of smart contract bugs.
Right. Explain that a bit for someone who's heard the term, but maybe doesn't grasp why a bug is so, disastrous in DeFi.
Okay, so these DeFi services run on smart contracts, basically, automated agreements written in code. Because it's decentralized and the code is often immutable, meaning it can't be easily changed once deployed, if there's a flaw, an exploit, a bug in that code, and a hacker drains the funds or the funds just get stuck, there's usually no one to call. No central authority, no regulator, no customer service hotline to reverse the transaction or get your money back.
Wow, so it's just gone.
Pretty much. It can be a permanent loss. You're not trusting a regulated bank, you're trusting the code. And sometimes code has bugs.
That lack of a safety net is, yeah, that's a huge difference from the banking world we know. Okay, so earning has its complexities and risks. Let's talk about spending. This feels like the real litmus test. Can you actually walk into your local coffee shop and buy a latte with Ethereum today?
Generally speaking, for most everyday small transactions, the answer is still mostly no, not directly paying from your wallet to their wallet anyway. Okay.
The infrastructure just isn't quite there yet for mass adoption at that level. You can use crypto for bigger online purchases, sometimes places like Microsoft, Newegg, some stores using Shopify payment gateways accept it. But yeah, for the local cafe or grocery store, it's still pretty fragmented.
So that fragmentation is where these sort of bridge solutions pop up, right?
Wow.
How are people handling everyday things like their Amazon habit or paying for Netflix?
Exactly. You nailed it. Things like gift card platforms, Coinsbee is a popular example, are kind of essential right now. You use your crypto to buy a gift card for Amazon or Netflix or whatever, and then spend the gift card.
Ah, okay. So it's a workaround.
It's definitely a workaround. It lets you tap into the regular economy using your crypto. For bigger things like travel, you do see more direct integration. Platforms like Travala or Cheap Air let you book flights and hotels directly with crypto, so some industries are definitely moving faster.
Right, travel makes sense. But what about the really big fixed expenses, like rent, utilities? Those seem locked into the old banking system. Yeah, those are the toughest ones. Absolutely. You might find, isolated cases, maybe in super tech-savvy cities where a landlord might accept Bitcoin directly.
Yeah.
But is it widespread? Can you count on it?
Probably not.
Definitely not. Not enough to build a reliable crypto-only life for most people. Not yet.
Okay, so if direct merchant adoption is low, and landlords aren't really playing ball yet, it sounds like this whole crypto-only lifestyle kind of hinges on one specific tool for practical spending.
It really does.
The crypto debit card.
That's the one, yeah. Cards from the big exchanges, Binance, Coinbase, Crypto.com, places like that. They're basically the essential cheat code right now.
How do they work? Is it real crypto spending?
Well, sort of. When you swipe that card or tap it, the exchange instantly sells just enough of your crypto balance, converts it into regular fiat currency like dollars or euros, and pays the merchant in the currency they expect.
So the merchant never even touches the crypto?
Nope. They just get paid normally.
So, does using a tool that instantly converts back to fiat kind of defeat the purpose, the whole ideological goal of a purely decentralized system?
It definitely forces a compromise, doesn't it? You're managing your funds in crypto, yes, but the final step, the actual purchase, it's still relying on that fiat conversion bridge.
Right.
It shows the system can work for the user, but it also highlights that true direct crypto spending, peer-to-peer, is still not the norm. It's still the exception.
That makes a lot of sense. Okay, let's shift gears slightly. It's not just about the tech, is it? Where you are in the world seems to make a huge difference. Geography and regulations.
Oh, massively. Location is probably one of the biggest factors determining if this is even feasible. You have to look at the extremes.
Like El Salvador.
Exactly, El Salvador, where Bitcoin is actual legal tender. Or maybe a place like Dubai, which is actively trying to attract crypto businesses and makes it relatively easy to spend, especially on high-end goods and services. These places offer some regulatory clarity.
But for most of the rest of the world,
that's where it gets murky. And potentially risky. Most countries are still figuring out their rules, where they have unclear regulations, or worse, they could change the rules overnight. Suddenly, the crypto you were planning to spend might be harder to use or cash out.
Yeah, that regulatory uncertainty sounds like a major headache. Your first expense in a new country might actually be lawyer fees.
It really could be. It's a serious consideration.
Okay, beyond regulations, let's talk about the hidden financial costs. Just the price swings alone. I mean, trying to budget monthly must be incredibly difficult.
It's a nightmare, honestly. That volatility isn't just some abstract risk, it's a real potential cost. Let's say you need $2,000 for rent and you set aside that amount in Ethereum. If the market tanks 20% before your rent is due or before you convert it, suddenly you're $400 short. That constant price instability can just bleed money from your budget if you're not careful or lucky.
And then there are the fees. People sometimes think crypto transactions are free or super cheap, but that's not always true.
Not at all. It's a really dangerous misconception. The fees can stack up incredibly fast. You've got network fees, sometimes called gas fees, especially on networks like Ethereum.
Right, I've heard about high gas fees.
Yeah, they can spike like crazy when the network is busy. Sometimes paying a high gas fee can completely wipe out any savings you thought you were making compared to a bank wire. Then you've got fees on the exchanges if you need to swap one crypto for another. And those crypto debit cards, they often have conversion fees built in too.
So fees on top of fees.
Pretty much. Understanding which networks have lower fees, when to transact, that user knowledge is critical to making this even remotely cost-effective.
But there's one detail, you mentioned it earlier, that seems to catch almost everyone out. The one that really undermines the idea of easily spending crypto day to day, the tax thing.
This is it. This is the kicker. In the US, and look, in many other major economies too, crypto is treated as property for tax purposes.
Okay, so what does that mean practically?
It means every single time you spend crypto, whether you're buying coffee, paying for software, whatever, it's considered selling that property. It's a disposition.
And that triggers
a potential capital gains or capital loss event. You theoretically need to know what the crypto was worth when you got it and what it was worth when you spent it. The difference could be taxable income.
Wow, so buying a $5 coffee isn't just buying a coffee, it's also a mini stock sale you have to track for tax time.
That's essentially it.
Yeah.
Yes, imagine doing that for every single purchase you make all year. The record-keeping burden alone is just immense.
Yeah, that sounds exhausting and incredibly complicated.
Honestly, it's probably the single biggest practical barrier preventing crypto from becoming a true mainstream medium of exchange for everyday stuff right now. The compliance overhead is just too high for most people compared to just using dollars or euros.
Okay, so let's try and pull this together. When we put the two systems side by side, traditional fiat money versus living on crypto, what's the real trade-off here for someone trying to understand this?
I think it boils down to control versus convenience, and knowledge being the key. Let's look at some basic metrics the sources point to. Speed. Crypto can be near instant, while fiat bank transfers might take days.
Okay, privacy.
If you manage it carefully, crypto can offer much higher levels of privacy than traditional banking, which tracks almost everything.
But then the risks flip, right?
Exactly. With fiat, your main risks are maybe inflation eroding your value, or, very rarely, a bank failing, though there's usually insurance. With crypto, you're facing extreme volatility, the risk of losing your private keys, and having zero recourse smart contract hacks.
Right.
So the conclusion, really looking across all the sources, seems to be crypto can potentially be cheaper and faster, but that but is huge. It's only true if you, the user, are incredibly well informed. Meaning you understand gas fees, you track the tax implications, you manage your security perfectly, you're aware of regulatory risks. An uninformed user will likely find living on crypto way more expensive and vastly more complicated than sticking with the old system. Knowledge makes or breaks it.
So, if the reality today needs that much effort, that much technical skill and risk tolerance, where's this all heading? What does that seamless crypto future actually look like?
Well, the vision is definitely one of deeper integration and, crucially, automation. The hope is that smart contracts will eventually handle those regular, fixed payments like rent or utility bills automatically pulling from your wallet.
Okay, so less manual management.
Exactly. And decentralized apps, or dApps, might evolve to handle your budgeting, maybe even track your tax liabilities automatically in the background.
And we've heard NFTs mentioned in this context too, which is interesting, beyond just digital art collecting.
Yeah, that's a fascinating potential evolution. The idea is that NFTs could become your sort of non-fungible identity token.
Your identity, how?
It could securely hold your credentials, your financial reputation, maybe proof of assets, all on-chain, controlled by you. This could make it easier to access financial services in the DeFi world without needing the old centralized credit score system.
Huh. Interesting. So putting it all together, is living 100% on crypto possible today? The answer seems to be yes, technically, but is it easy or practical for most people?
Not yet. Definitely not yet. It takes, like you said, the skills of a tech pioneer and maybe the stomach of a high-stakes gambler right now.
That's a wild ride for sure.
It's absolutely a thrilling ride for those who want to be on the cutting edge, who believe in that decentralized future. But the absolute first step, the key takeaway for you listening today, is you have to understand the real costs involved.
Right.
Knowing that every time you spend, it might be a taxable event. Knowing that being your own bank means if you mess up, the money's gone. That understanding is crucial before you even think about diving in.
That fundamental
Music
difference,
licensing
crypto as property versus
reimagined.
crypto as currency in the eyes of the law and tax authorities, that really does change the entire calculus, doesn't it?
It changes everything.
Okay, so here's a final thought for you to chew on. Building on these ideas of smart contracts, automating things, and NFTs as identity, really reflect on what it means when these decentralized systems, smart contracts, dApps, start managing essential parts of your life, like paying your rent or your power bill automatically. If your financial identity, your reputation, is increasingly tied to these non-fungible tokens that you control, not a government ID or a credit bureau report. What does that really do to the power of those traditional centralized identity systems?
Yeah. What happens when the banks, the credit agencies, literally can't see your score because your
Music
financial life
licensing
exists largely
reimagined.
outside their view? What replaces it?
Something to think about.
We'll leave you with that one.
We've definitely gone deep today. Thanks for joining us, and we'll catch you on the next one.
Artlist.io